Good morning. So Friday the 7th of April, let's get the briefing underway, and obviously the chart's telling a bit of a story already this morning. Shortly after 2 a.m. London time, you can see a huge kind of flight to quality bid across asset classes, all coming on the back of the Syrian airstrikes ordered via President Trump that came overnight. This is obviously in response to what's been ongoing chemical attacks in that area, and so pretty strong-handed response from Trump pretty early in his presidency, sending out quite a sharp signal to the kind of global world, really, in what has thus far, from the likes of Theresa May and some of the other Western leaders, been agreed in terms of the action that was taken. I would imagine, though, as we go through the day, you'll probably have various heads of state across much of the Western world putting out further commentary on the matter, so it'd be interesting just to hear what they have to say. But thus far, it's all been in agreement of the action in which the US took. Now, let's just have a quick look at how the market reacted to this. First of all, as soon as the news kind of was released, I mean, let me just look at the headlines here, what we're looking at. So, Trump launching military strikes against Assad's Syria, Tomahawk missiles fired after gas attack, with more than 70 people, and essentially I think it was 59 Tomahawk missiles that were fired. This being the kind of makeup, so it was near Homs, which is the actual airbase they were targeting. It was just outside of that, about 45 kilometers in that particular Shirat airfield, but obviously fairly close to Damascus, and not far from Lebanon either. So on the kind of western border of Syria, this was a particular airfield in which they were targeting. A bit of background information on this. So the US actually gave Russia some notice about the strikes, saying US military planners took precautions to minimize risk to Russian and Syrian personnel located at the airfield. But this is actually one of Syria's largest air bases, so hence the reason why specifically they were targeting that area and airfield. However, Russian state media have reported that Moscow would demand a UN Security Council meeting to discuss the US strike. So their major news agency, the RIA, have quoted the head of Defence and Security Committee at the Federation Council, the upper house of Parliament, as saying this can be seen as an act of aggression by the US against UN member countries. So obviously what's going to be said out of Russia actually is probably going to be the most interesting. It's already been condemned here. Likewise from Putin's made a couple of comments on a similar vein, but how they respond is really the more important factor, I guess, in the bigger scheme of things. So the initial move here was, you can see top right, very sharp bid into spot gold. You know, if you look at the kind of classic flight to quality kind of move, if you look at gold, we briefly breached then the end of February highs, and that puts us at the highest price in gold, having touched up at around 1268 since the night of the US election. So you're looking at the highest prices in gold since early November, with a decent move overnight on the back of that news. Likewise, if I was to bring up 1 over JY6, so you're looking at dollar yen. So obviously when you have that gold move, that move into kind of safe havens, classically you also see demand for Japanese yen, and overnight as well that also briefly touched down to its lowest levels seen in a number of weeks. How is that translated into other prices? Well, equities initially dipped, as you can see overnight in your S&P chart. So just looking at there, just shortly after 2 o'clock, and then consequently T-notes also a pretty quick sharp move to the upside by around 14 ticks or so, before hitting that on the daily pivots, that R2, and just trending a little lower. Now, the one thing I would say with this type of news, and it's a couple of questions I've had from some of the newer guys, is, you know, does this now create a new environment of risk off trade? And I'd say probably not. I mean, this is a the way I would kind of see it is this is a bit more of an isolated response in regard to a situation that's developed through the kind of Assad regime. I don't really see this as being a kind of a continuation of an ongoing military type action. It is what it is, it's taken place, and I don't think that there's anything much more to it at this point, other than now what we're listening for more is the communication from various political leaders. As such, you're already seeing a bit of a reversal in the move in equities. We're back to pivot, has been reclaimed already. T-notes consequently also just back below R1, taking back about 2/3 of the initial move. Gold has remained elevated. It seems to have found a bit of support around R2. But the one thing that I guess that might be a little bit more supported in my mind is probably crude oil. Now, crude shot higher overnight. You can see that pretty powerful move. I mean, we're going from 51.75 all the way up to close to 53, so well over a dollar move that was seen over the course of an hour after that news broke. Kind of drifted a little lower, a bit of profit taking maybe in a late Asian trade before then Europe's come in and it's gone bid again back above R2. The reason why I think oil maybe it translates into a bit more cleaner on the direction of it being supportive is because of the geography of where Syria sits and the connotations that this has for the region, i.e. the Middle East. So if we look at this map, and I'm looking at Syria, the strike's happening roughly here, where I'm just hovering my mouse at the moment. Now, obviously, most of you will know the kind of various relationships between all these countries and nations within this particular area. You know, when you're talking about trading oil, this is kind of where it's all at. You know, you've got the Straits of Hormuz here. You've got the Suez Canal coming through here. You've got the Bosporus Strait coming through Istanbul here that transports out of the Black Sea. You know, these are all highly critical areas of seaborne traffic for crude oil. And then you're talking about the biggest cluster of producers on the planet. Now, what happens here is you have to look through the veil of the kind of the headline and start thinking about the deeper relationships that these particular OPEC producing nations have. Now, if you think of Syria, obviously Russia are particularly unhappy with this kind of strike action that's being done in their eyes without really any hearing at the UN to have full kind of backing behind it. They've just, as far as the US are concerned, the Syria have broken their side of the bargain, and therefore this is the consequence of that action. But obviously Trump, since he's come into office, has been very much trying to solidify relationships with Putin right from the off. Much more personal contact than, say, previous administration, which was obviously heavily sanctioning Russia. Trump, when he started his presidency, has pretty much done the opposite. And if you think about some of the conversations we've been having about this jostling for position in regards to global powerhouses of oil production, you've got Russia, who have overtaken everyone, closely followed by Saudi, and then US output is quickly coming on the coattails, on their heels at the moment. And about how potentially maybe a bigger, broader plan is teaming up or having better relationships with Russia in order to counter the overall monopoly that the Gulf nations have had on crude global prices for so long. Obviously, a situation like bombing Syria has severe ramifications for the relationship building between that of Vladimir Putin and Donald Trump. Now, this is important for oil for a couple of reasons. One, Syria obviously backs on the eastern border Iraq. And Iraq, we're up there then top 4 global producers. Well, certainly within OPEC, they're one of the big boys, so to speak, in terms of the amount of oil that they produce. If you think about the relationships then between Russia and Syria, Russia and Iran, obviously is they kind of sit on the same team, so to speak, in terms of how they're politically positioned. this obviously has connotations then with Iran and how they then have a historical issues with Saudi Arabia, who are backed by the US. So you've got the biggest producer in the area with US backing in conflict with the Russians, who are the biggest oil producer on the planet, who are also quite comfortably in conversations with Iran, who have a distinct interest in also in Syria. You can see how this quickly becomes a very action that's been taken overnight becomes a bigger destabilizing effect in a very what can be hostile geographic region, which carries direct importance for the production of oil. When you talk about Iraq, Iran, Kuwait, Saudi, these are all some of the key producers globally. And so that's why, although the likes of T-notes and equities might pare back some of that move, actually, if you're looking at oil here, since Europe's come in, it's just had another little move on the upside. And I'm not saying that this price is going to power on and on and on, but could well potentially be a reason to maybe get long again at a technically sound point, even if we get a bit of a pullback, because I'd say that this news is probably only likely to increase tensions in that area. Increased tensions in that area is a bullish factor fundamentally for the price of crude. If you also think about it from an OPEC point of view as well, OPEC trying to counter the price is totally dependent on non-OPEC nations, i.e. Russia, also being involved. Would Russia want to actively get involved trying to help assist the Middle East and OPEC in propping up the oil price when the US backs Saudi on a militarily front? So there's a lot of moving pieces here that I think that make fundamentally me feel a little bit more bullish on the fundamentals for oil, on what's occurred, whereas I don't really see it having a lasting impact for the other kind of assets like T-notes and S&P. If you're looking at those particular instruments, people are much more concerned now. Attention will turn to non-farm payrolls. That's obviously coming out at 1:30. That's the bellwether kind of jobs report. People will be looking at that, as they always do, with great interest. Probably this is a quick, fast money move that occurs overnight in those instruments, and then people trim that position, book their profit, and actually no one of an institutional kind of size is going to be sat in the market ahead of non-farms, which typically becomes very quiet. Whereas oil, on the other hand, for the reasons just discussed, might maintain a bit of an underlying bid tone. Looking elsewhere, currencies pretty quiet this morning, not a great deal going on. We've got some UK data coming up later, which definitely we'll need to keep an eye on. But gold also remaining quite well elevated. But as I said, technically as well, it's managed to get over some of these recent highs. You can see here, just sub that R2 level that I'm looking at. This marks out now fresh multi-month highs. So maybe that's just providing technically a bit of underlying support amid that flight to quality bid seen overnight. Just on the issue of all this politics ongoing, there is an absolutely fantastic book that I'm currently reading that makes sense of all of the kind of basically it takes by topic individual countries, and it goes through the history of why there is tensions, why say China and Tibet, why there's an issue in that particular area. For the US, why there's particular interest in acquiring ports around the Mississippi and the South Coast. All things of that type of nature, and it goes through China, the US, Russia, why their relationships are formed, what the key areas of interest are, why it's important that Western powers are speaking to China to safeguard their future. It's a pretty concise short book, very easy to read, but it's a really excellent insight into the geopolitics of the global situations that are very much going on at the moment. Highly recommend it. If you have £10 free, then definitely worth a purchase. It will definitely help broaden your understanding of interpretation of the type of news stories that are becoming more common in this current context of geopolitics. Okay, let's have a quick look then away from the Syrian situation and some other things to be aware of. One thing that I was looking at this morning was the Aussie dollar. Did see a bit of movement overnight, and if you actually look, it came around the same time of the Syrian situation, but there was a headline that caught my eye that I was looking at the time, was China iron ore drops nearly 8% on forecast of price fall for 2017. Don't forget, China is very much a bellwether, if you like, or a proxy, or the Aussie is a proxy for Chinese kind of appetite, demand, economic growth. Does translate quite nicely as a correlation into the performance of the Australian dollar. And so what normally happens is, these types of downbeat moves in the industrial metals can often translate into some Aussie weakness. Now, looking at this performance of iron ore over the last, going back since the summer of 2016, you can see there's been a dramatic price drop over the last few weeks. Now, a couple of reasons for this. And particularly overnight, as the cost of iron ore in China has fallen to its lowest level since November. It comes after an Australian government forecast. So essentially, a quarterly report from Australia's Department of Industry, Innovation and Science predicting average prices in China would fall to $65 a tonne this year before declining to 51 as an ultimate target. Now, the reasons for this is because iron ore port stocks have reached the highest level on record in recent quarters. So there's an oversupply in the market of iron ore, and there's anecdotal evidence suggesting that much of that was comprised of low-grade iron ore, whereas demand at the moment is for a different, higher quality grade. So there's basically an oversurplus of the lower grade quality iron ore in the marketplace, and hence it's kind of like an oversupply nature, same situation theoretically as in the oil market, and as such the price expected to decline. And so iron ore starting to see some dramatic movement on the back of that. So something to maybe just be aware of, just ongoing in the background. Have had some German data this morning, following the factory orders which kind of snapped back into positive territory yesterday. German industrial production and trade surplus beats expectations in February, so back to back, even though we do tend also, like the factory orders number, tend to get quite volatile swings. Back to back, very solid numbers coming out of Europe's largest economy for their industrial production this morning. So also as well, maybe that helping negate any kind of negative read across that there may have been from the Syrian situation, albeit I see that as a fairly muted repercussions for the equity market at this point. Just quickly, actually, just the final point on the Syrian issue as to what to look out for going forward. I saw some very good comments in the FT from basically a Middle Eastern expert in Washington, and he was saying, well, basically, you can divide what's happened into two distinct kind of one positive and one negative factor. And this is what I would probably look at going forward to kind of assess the situation. The positive being that it's convincing evidence that the Trump administration will play by a different set of rules than his predecessor, who was widely viewed as hands-off on the Middle East. So, if you were looking for Trump to send a signal to, stamp his authority about kind of having failed on certain metrics so far, i.e. Obamacare and the repeal of, this is definitely something which he's been quite quick and forceful of in triggering this military action. The other thing, of course, is you can imagine the scene yesterday. There they are, Trump and his wife, and Xi Jinping and his wife sitting there, just about to bring out the desserts. Trump gets a little whisper from his advisor in the ear. They go out, and then he comes back and just says, "I've just shot 59 Tomahawk missiles at a Syrian airbase," while he's in the middle of dessert talking with the Chinese president. If you were trying to send a signal to someone just before you go into a day of critical trade talks with one of the world's most powerful nations, that's a pretty strong show of hand of your military might against one of your biggest threats, technically speaking, on the military front. And so, there's also maybe a little bit of that at play as well. It'd be interesting to see how China responds commentary-wise today to this type of action that's occurred. The negative here is what we've already really discussed, and that's about the downside is that it was unclear how Syria and its patrons, Russia and Iran, would react to this type of situation. And as we discussed, they have been the kind of main opposition, if you like, of the US in terms of the previous administration. So how that gets managed is going to be important. Okay, a quick look at the calendar, and for this morning it is relatively quiet. The one maybe flash of activity that you might see would be around the sterling currency at 9:30. You've got a collection of data coming out: industrial production, manufacturing and construction output. As per usual, when there is a cluster of numbers coming out, you're probably going to be best placed to just see, I'd focus probably on the IP and manufacturing more so than the construction figure, but you want to see a kind of unidirectional set of data in order to create any type of decent move, and it would need to be a little bit more outlying. I would say that what I would be thinking is that even if you had an outlying number and the pound does move on the data, it's most likely going to be a fast money move, because no one's going to want to sit in the market too long ahead of then non-farm payrolls. So it's not going to be a case that the data is going to come out, it's really going to move the market, because the real big players in the market are unlikely to commit any large capital on such small type movement ahead of a big volatility release like non-farm payrolls. So if you're going to get involved on the data, what I'd suggest is you're going to have to, if the situation arises, you're going to have to hit it and just be out of that position pretty quick snap, because the movement, I would say, is unlikely probably to last for too long. Moving then attention to the main event, if you like, which is the labour report. So non-farm payrolls, regular time 1:30. We'll have a full rundown we'll do ahead of that before the release. We'll go through that in a bit more details, but just briefly painting a broader scene for the setup going into that number. ADP employment change, of course, earlier in the week. This is always the same pattern ahead of non-farm payrolls. You get the various job indicators that come out, which people will use in summary as an assessment then for what they foresee for the labour report. And for ADP, that was a pretty solid number. 263,000 was above expectations of 187, so it was a very strong beat. The previous did see a downward revision from 298 to 245. However, the 3-month average is still trending at a fairly nice, comfortable level comparative to the historic 12-month kind of pattern. So ADP was strong. If you look at the manufacturing PMI, that did show a slowdown, but the employment constituent was up. But for non-manufacturing, that also weakened, and not only that, it was the lowest reading since October of 2016 as productions, new orders, and importantly employment as well as inventories slowed. So you've got a good ADP. The headline was a little bit weak on the manufacturing PMI, but the employment constituent was up. But then you've got weak underlying employment situation in the ISM figure that came out in the service sector. The other key thing that a lot of people are looking at with this report, and this is when you have to be a little bit more broader thinking about the actual survey period that non-farms is measuring, is that, do you remember the storm that we had, the winter storm Stella in the US, in I think the northeast coast? That is going to have ramifications for the jobs creation situation in the US. So actually, quite a lot of investment banks are looking at the weather conditions to impact the jobs report, i.e. it's going to impact it to a lower number effect. Less numbers being able to be created just because of the adverse weather conditions for that period of time during the survey month. So that might mean that you get a weaker number, but does that really translate into any different thinking broader for the Fed? No. Because the Fed know that even if it is a weak number, it's likely to be discounted by the fact that it can be explained by a one-off seasonal or one-off item type situation, such as bad weather, as it meant that we've had an artificially low number, if that makes sense. So ultimately, what you might get with non-farm payrolls today is, if it is a weak number, you might get an initial knee-jerk response in a negative fashion, only then for the market to recover, because ultimately it gets discounted due to the weather conditions that occurred over mid-March period, of which this is the month of which it's measuring. Obviously, non-farm payrolls, as you well know, is a summary of many different components. The key ones really that you need to be looking out for, not so much the unemployment rate. I haven't really seen any banks expecting that to change. So the headline is the kind of initial knee-jerk risk, but then obviously looking at the average hourly earnings is really critical. That can also have a very heavy influence on the actual outcome of the prevailing move, as to can the revisions and 2-month net revision. But again, we'll go over all of this in a lot more detail later when we get closer to the release. Okay guys, so I'd say overall I wouldn't expect too much now from this morning. Typically for the newer guys, what tends to happen the morning of non-farm payrolls is painfully quiet, and it's just a case of being disciplined to just wait for the jobs report to hit, and then the trend that might materialize thereafter, depending on the quality of the report. The one thing, as I said, that I think might come into play is this oil move. Even as I've been speaking, I've seen oils being just edging up a little, very slowly, but we're now up $1 on the session, and for those reasons that I was discussing. So that's something also I'd keep an eye on this morning, and you've got the UK data coming out in half an hour for the sterling currency. Okay guys, that's your briefing. So I'll catch you in the chat room, and if I don't speak to you before then, have a fantastic weekend. Thank you.